Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great day, had a great Thursday. We're about to roll into the weekend. But before we do, we're going to do what we do each and every day, identifying both breakouts and reversals from an educational perspective, trying to see what are good setups for the day. And we do have a bit of movement today. Both the S&P and the Nasdaq are up around 0.5 to 1%. We're seeing a little bit of movement in the Dow and the Russell, and then also our crude oil and gold. So we're going to start the day with the big picture. So with the big picture, starting off with the S&P, we're up 25 points this morning. Now, I normally start with the S&P, but I'm actually going to start with the Nasdaq, and this is something that we pointed out yesterday in our live trade room. Once again, if you want to join our live trade rooms, please feel free to go to tradersarmy.com, use promo code TRADER60, and come on board, see if it's something you'd be interested in doing. But we pointed this out yesterday in the live trade room. We talked about the fact that the daily chart was bouncing off of a quality area of demand. And so since that was occurring, we anticipated that we may have a bit of a bullish day. Now, by the way, it doesn't mean that the markets are going to continue to rally up. Matter of fact, we may go up today. We may even go up on Monday. To me, the most bearish of all possible situations is if the market rallies up to this area of supply and then is unable to create a new high. If we rally up to this daily area of supply and we're unable to create a new high, or we reverse before that and we get below this swing low, that to me is the most bearish of all scenarios, because in that case, we've now confirmed a lower swing high and a lower swing low. So to me, we're at a very, very pivotal point right now in the markets in general. And so when I'm looking at day trades, I'm still okay taking intraday shorts, but I think we may continue to rally until we reach this daily area of supply. Now, we can reverse before that. Certainly, there are some supply levels. The first one being the 15-minute level that we're coming up against right now. Now, this 15-minute level is a rally-based, very strong drop. We are coming close to the area. The problem is we came really close to it and didn't get in, and now we're basing in front of the level. And so anybody who watches us on a regular basis knows that basing in front of the level is the kiss of death. We would look at that as the KOD. And matter of fact, I think that you might be better off looking to see if that becomes a breakout trade above that region. I'm even okay if you want to try a little reversal trade down here to head back to the upside. But basically before the level, kiss of death. Now, if we break above there, in my mind, the next clean area of supply doesn't come into play until here. It's this little rally, drop-based drop at around 13.5. Now, the S&P wasn't bouncing off the same daily demand. If I go to the daily chart on the S&P, that same daily demand, the best daily demand comes into play down here. So we may get a bounce on the S&P off the daily demand, and then this thing can continue to come down, and then this is really, in my mind, the best level on all of our charts of all of our indices. Does it mean it's going to hold? No, but I think it's a pretty good level and a pretty good area where I would be expecting a decent bounce off of a zone right here. And once again, this is the daily time period, certainly not the hourly. But now on the hourly time period, we did break down below this area here, which was a bit of a descending triangle pattern. We put in a little bit of a double bottom, right? A double bottom pattern. The W should not be a straight W. It's a little bit crooked here, convoluted as it probably should be. And now we're kind of rolling over a bit, and we've hit this area of supply right here. So in hitting that area of supply, beginning to roll over, we would have to say, all right, what's the chances that price continues to roll over and we go down further from here? I don't think that there's a lot of great trades in here at the moment. I really don't. I'll be interested to see what happens right at about this area here, because that's an old area of resistance that acted as support. If we get basing in front of there to drop below. But as far as reversal levels, I mean, you got a 15-minute level up here, but nothing that is jumping out at me as far as a tradable level. Looking at crude oil. So in crude oil, oops, not the Nasdaq, crude oil. Looking at crude oil, we did bounce off of our hourly level of demand and started to get a pretty nice run off of that zone. Um, that hourly level of demand is in the context of a bigger picture upward trend on the 4-hour chart, but it's definitely slowing a lot of slowing momentum in here. And so got a little bounce off the zone. At this point, I need to delete the level, let it go, and now look for the next area up above. And so the next area up above, I think on the hourly time period, you have this area right here, which is formed at a pretty decent time of day, right there around the London Open, where we have this drop-based drop, like I said, formed at a pretty good time of the day, where oftentimes we will see a little reversal. And then last is gold, and gold bounced off of our 15-minute demand area yesterday, as we had identified. Oops, I'm going to go back further. This little bitty area here, we call that a noisy cricket, right? A wick over wick on a 15-minute chart. It's a noisy cricket. We identified a noisy cricket, and price hit off that level and then got a really nice rally from that zone. Still continuing to move. The level itself is actually still valid, but needs to be switched to a confirmation entry at this point. And then we're just going to be kind of basing up underneath this level for the next move in order to see what goes higher. But 4-hour chart, I mean, my overall sentiment is that gold has a better chance of continuing to trade a bit higher, especially as an inflation hedge. Because, people are utilizing gold as a currency. Speaking of currency, let's talk about our stock of the day. So our stock of the day that we're going to talk about today is Coinbase. And Coinbase had an IPO a couple of weeks ago, and we spoke about Coinbase's IPO, and we said, hey, listen, I don't mess around with stocks that are just getting started, because I wouldn't be surprised to see that thing come down pretty heavily. And lo and behold, that's kind of what we've seen. Now, this morning, we had earnings of 305. Earnings were announced after the bell yesterday, and earnings came in a little bit less than the estimated amount. But for an IPO to actually come out with positive earnings, especially one that's a tech-heavy IPO, is actually pretty rare. Usually, you go back to, if anybody remembers the Uber IPO, Uber has yet to put a positive number in front of their earnings reports. Now, that being said, it's gone from an IPO price of, make sure that I got the whole story here. It's gone from an IPO price of 45 back to 45, but it got as low as 13, right? And on big negative numbers and big negative losses at first, and then it started to rally back up. And actually, one of the things that we're seeing is it's trending towards less losses, right? We might actually even see a positive quarter next quarter in Uber based upon the trend that we've seen. So Coinbase is throwing money on the board pretty early for a tech IPO, and so with that, it's actually giving me a little bit more sentiment, a little bit more hope. I don't think that I'm still ready to get in on this thing and take it anywhere, but looking at this on a smaller time frame, if I go to like the 1-hour chart, I do have a potential breakdown area right here, because this morning we're going to gap up to about 272 by 273. So somewhere up in this region, right about here. Okay, we're going to gap up somewhere into this region up in here. And then you've got a potential breakout trade. So we haven't had a lot of trades yet to set up with this thing, but we have seen that there was that descending triangle pattern that gave us a breakdown that continued to move. We did see this little area here where there was some support and then a breakdown. And so in the absence of other, things that I can lean on from a standpoint of true demand and supply, I will utilize simply support and resistance, although that breakdown's a pretty clean one. And then there's a little supply area up here as well on the hourly chart. So I'm going to keep a slightly more bearish short-term outlook on Coinbase. I do believe that Coinbase has the ability to really be a big runner and a big winner. One of the things that I do in longer-term investment ideas is I take to look and see what are what are some of the technologies and things that people are utilizing that they weren't utilizing 5 years ago, right? And this is one of them, right? This is one of them. I mean, they were utilizing it, but it was the fringe, and it was a fringe number of people that were using them. And now, as it gets more mainstream and more people use it, now we can start to see the explosion in the mass market acceptance. We could see Coinbase really, really run from there, and I think that's why we saw an IPO price that was as high as it is. When I look at this, though, I will say this: even if you use for those of you that trade options, when looking at the options on this, let's even go out to, I don't know, August. You've actually not got too bad of a spread, right? But they're fairly expensive. The options themselves are more than 10% of the underlying of the strike price, which is a good gauge to see how is it overpriced or overvalued or whatever. And that simply exists because if I throw my implied volatility set on here, oh, I don't have it yet. Hold on, let me change this. There we go. We have an implied volatility of, what's our number right now? 85, right? Which means that they believe that this thing has a chance to move 85% in the next 252 trading days or so. So volatility is really, really high. So if you like it, I certainly would not go out and buy a put or buy a call, right? No matter which direction you want to trade it. I would definitely want to do some sort of a vertical spread. And if you're so inclined, because the volatility being as high as it is, you might actually get a decent credit for a vertical spread that expires relatively soon, right? I mean, here's one that expires in 7 days, and if I can get paid for price just to stay below a certain level, it might actually be, a pretty good little trade. I mean, for example, the 300 by 310 bear call is paying $1.40 credit, which means that I've got about a $10 worth of exposure, $10 worth of risk, and I'm bringing in a credit of $1.40. But really, I don't have $10 worth of exposure. I've got $10 minus the $1.40, so $8.60 worth of exposure on that vertical spread. And so $8.60, which is the 10 minus the 140. So if you think about it in that way, that would be $1.40 divided by $8.60 to calculate your rate of return. You're looking at a 16.2% rate of return in 7 days. And all the stock has to do is stay below 300. Now, if the stock goes above 300, then certainly you can lose more. You can lose more into that spread, but you've got a stop loss in my mind just above 295.09, which is our hourly area of supply. So I think that's a way that you can talk about playing Coinbase right now that takes advantage of the high volatility. You're still netting a decent little return. If you want to trade it directionally, you could certainly do a bear put spread, but you're going to have to widen that spread out in order to take advantage of the movement because your volatility is so high. So, and I know that's a little deeper than we normally get into in the DMC, but I at least wanted to show that one to you because I thought it was a pretty interesting setup and a pretty interesting trade. But until tomorrow, everybody, hope you guys have a phenomenal day. Actually, not tomorrow. Sunday night, live trade room. Be there or be square. Go to tradersarmy.com today. Become a member. Come join us. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.